Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is August 13th, 2018, and tonight I'm going to take a look at live cattle. And the reason for this is that I'm going to show two things in this particular presentation. One, why it is that you should be looking at this market now because there's a really good opportunity in the market. And the second thing is at the tail end, I'm going to show that it has a near zero correlation against the vast majority of the markets over time, and why it is that you should incorporate this into your portfolio, because it's a really good market to add that diversification that I think a lot of portfolios, a lot of trading portfolios are actually lacking. So stick with me all the way through this so that you really get a good feel for specifically the market and why you should be trading it, and secondly, of course, why it adds diversification. So live cattle right now, the important thing that we're going to be looking at for this presentation is that it's in a trading range, a quiet phase, and therefore there's most likely going to be some type of a breakout. Now, as we speak, the trends are all pointed to the upside. When we look at the chart, you'll see why. We've got the technicals, which really haven't caught up, and they're still pointing to the upside. But what is looming out there is the seasonal tendencies are quite weak right now, so reversal is likely, and we're at critical support. And if we break that support, there could be good opportunity here to make some money on the short side. So let's take a look at the market as a whole just to really get a feel for what's taking place. These bars right through here are daily bars for cattle. You can see the trend has been to the upside, but what it's had is kind of a choppy trend, peak, valley, peak, valley, peak, valley. Well, we just recently in the last few days or so had a peak, and now we're in a valley that could theoretically make for a good opportunity to buy the market, but I think that things are actually changing here, and we're watching this market very carefully because we're in a trading range. So I'll point out, one, this gray line represents the 200-day moving average, and we broke below that. The yellow line is the 50-day moving average. We're above that, so we're in this in-between stage between the two moving averages. You can see this magenta line. There's a couple of them right through here. These are support and resistance levels to the market. And if you look at this all the way across the way, this one right now is acting as resistance. This one over here, the second one, is acting as a little bit of resistance. We're actually at that level now, so we are breaking down, if you will. We have another one that's very weak, but this corresponds to the 50-day moving average, and if we should break that, then our next target down, it's not too far, but it's at 105 3/4. There's a nice little tradable opportunity, and if we're able to break that, you can see these other levels to the downside, that there's a good opportunity for a trend to start to reverse. And if that trend that we're under right now does in fact reverse, then there's great opportunity not just down to this level, but these other two levels that are right through here. This one right here, which stands at a 100 3/4, and then this major one, which is at 97.90, so call it almost 98 or so. So those are some of the downside targets to the market. Here's the energy level that I was talking about. You can see that the market, with this tight range here with the yellow lines, that the market has been, even though it's been in a trending phase, that the consolidation has been looming here. And right now, with the green line having fallen below the yellow line, that tells you that we're in a tighter consolidation. So we actually come back to the website and we take a look at the energy level to give you some perspective on this. Here's our energy level, and you can see that the markets of all the 40-odd markets we track, cattle is at the very bottom down here. So it's in the tightest consolidation of all the markets we trade, and it's something that is setting up and it's poised for some type of a pretty good size move here to the upside or to the downside. But for our purposes right now, I'm going to make the case, I think, for the downside, but we're just going to watch and see what the systems do for the most part. Along those same lines, we talked a little bit about the seasonal tendencies. Well, when we look at the top 10 list of all the markets we actually look at, here's cattle, number 2 on that list, and it's highly accurate right now as far as tracking its seasonal tendencies. If we look at those seasonal tendencies, this is a 10-year chart, and you can see from where we stand right now that the trend into the first week or so of September is to the downside. And you can see with these kind of grayed out areas that it has been tracking the market as a whole pretty accurately. If we flip to the 5-year charts, you'll see that it's also accurately tracking, and that the downside is a little more pronounced. So from where we stand right now into the first week or so of September, there should be a downside bias to the market. So if we're in that little consolidation period where it's tight and looking for some type of a breakdown, then we would be looking at the seasonal tendencies as one component to give us a guideline as to where things should be headed. Now, as it stands right now, with the we have 12 systems here that trade cattle. They're all flat. So we're not actually in a position right now. We're not hedged in any way. We are flat, no positions whatsoever. And we're not going to stay in this period for much longer. I would suspect that one way or the other with this consolidation we're in, that there's going to be some type of a breakout. The seasonal tendencies tell us that it should probably be to the downside. So I'm watching the short positions, the short systems very, very carefully, thinking that there's an opportunity here for a really good trade to some of those targeted levels that I was pointing out before. Now, you may not trade cattle. This may be a brand new market to you, but if you don't trade it, or if you do trade it, I just want to point out a couple things. This is our weekly correlation volatility. We have a monthly as well, and you'll see that cattle right here on the weekly is at the top, well, near the top of the list in comparison to all of the markets. And this correlation is essentially this. If you look at cattle in comparison to all the other markets on this list, it has a consistent near zero correlation, and that correlation around the near zero correlation doesn't fluctuate all that much. So that tells us that that is a market of all the ones that are listed here, those that are at the top 10 or the top list here. Those are markets that you would probably want to incorporate into a typical portfolio. Now, you may not trade cattle, but it is a market that, because of its diversification, its non-correlation, and the fact that it has low volatility in that correlation, it makes for a really good market to incorporate into your portfolio. It adds diversification, in other words. So this is a weekly volatility of the correlation. Well, let's take a look at the monthly. It's at the top list here as well. So whether you're looking at weekly or monthly correlations, those that are near zero levels, and they don't fluctuate that much from near zero against the majority, not all, but the majority of the markets that are listed here, well, now you're looking at a market that is really good to be incorporated into your portfolio. So hopefully I've given you a pretty good overview as to why the market is in a perspective for some type of a breakout. I've given you a perspective that it should break to the downside based on the seasonals. We'll see what does take place and actually follow the systems. But then the other thing is that it is, along with cattle and natural gas and a few other markets, a really good market that offers up diversification across all of the markets. So I'll do a signal insight on a little more information on this correlation volatility weekly and monthly, but just understand that that is a market that you might want to incorporate into your particular portfolio. So with that, hopefully we'll see what does take place with cattle, and watch the system very carefully, and we will take a look at another market tomorrow. Thanks so much. Bye-bye.